Get worried. Get worried. I haven't seen that yet. Where everybody's wildly enthusiastic and spreading hot tips, but I have the feeling that that is coming fairly soon. And then, if I'm smart enough, I hope I will start to sell short when I see everybody getting wildly excited about the stock.
Stock market seems to be defying gravity, so Jim Rogers is sharing his insights on why caution is paramount. With concerns about the U.S. market at an all-time high, he reveals his investment strategy and the opportunities he sees in China and Uzbekistan.
I'll use America since that's the largest stock market. The American stock market has been going up for the longest in American history. Never in American history has the economy and the stock market done so well for so long. Maybe it's going to go on forever. Washington says it will. Don't worry. But when Washington says don't worry, I worry.
The current state of the U.S. stock market. The U.S. stock market is at an all-time high. This situation is unprecedented in American history. Many people feel confident. They believe this rise will continue forever. But that is a dangerous mindset. Washington encourages this optimism. However, when they say don't worry, I start to worry. The market's performance has been strong for a long time. It's natural to question how long this can last. Investors should be cautious. Highs can quickly turn to lows. History shows us that markets can change suddenly. The current environment feels unsustainable. Despite the positive outlook from many, I see warning signs.
When Margaret Thatcher or somebody like that's in charge, you more or less know what's going to happen because they have an underlying basic philosophy. Mr. Trump, I don't think Mr. Trump has an underlying basic philosophy except that whatever he needs to do, he will do.
The fundamentals of the U.S. economy are troubling. The country is the largest debtor in the world. This fact cannot be ignored. Investors must think critically about where to place their money. Holding cash may be the safest option for now. Jim Rogers. A candid introduction. Jim Rogers is a well-known investor and financial commentator. He has decades of experience in the markets. His straightforward approach sets him apart. He speaks candidly about his views and concerns. Rogers has a track record of successful investments. He does not shy away from making bold predictions. His insights are often grounded in historical context. He believes in understanding the past to make sense of the present. Rogers is not just an observer. He actively manages his investments. His strategy includes selling stocks, especially in a market like this. He prefers to focus on opportunities in places that others might overlook. Selling stocks, a personal strategy. For many investors, selling stocks can be daunting, but for Rogers, it is a necessary step. He has sold nearly all his stocks globally. This decision reflects his concerns about market highs. He still holds shares in specific regions. China and Uzbekistan are at the top of his list. These markets are not performing well, but Rogers sees potential. He believes in investing where others fear to tread. His strategy revolves around caution and awareness. He knows the risks involved in every investment. By selling stocks, he protects his capital. This approach may not align with everyone's beliefs. However, it is a personal strategy that has served him well. China, a depressed market with potential. China's stock market is currently depressed. This situation stands in stark contrast to many other global markets. While others are at their peaks, China offers a different narrative. Rogers sees this as an opportunity. The Chinese government is actively trying to revive the economy. This effort could lead to significant growth. Rogers believes that despite its current state, China remains a key player. The potential for recovery is significant. Investors should be aware of the risks. The landscape is complicated. However, Rogers argues that the depressed state of the market may provide a cushion. It is essential to assess the situation carefully. Uzbekistan, an emerging opportunity. Uzbekistan is an intriguing market. Once a part of the Soviet Union, it faced many challenges. However, the country is undergoing a transformation. New leadership is bringing fresh ideas. This change could lead to exciting investment opportunities. Rogers emphasizes the importance of understanding local markets. He urges investors to know what they are getting into. Uzbekistan may not be on everyone's radar, yet it offers a unique chance to invest in a growing economy. The potential rewards might outweigh the risks. Investors who do their homework could find success. Uzbekistan is a market to watch closely. It may surprise those willing to take the plunge. The dilemma of cash holdings. Holding cash can be a double-edged sword. On one hand, it provides security. On the other, it can feel stagnant. Rogers currently holds much of his wealth in cash. He prefers US dollars. This choice may seem counterintuitive given the US's debt levels. The reasoning is simple. In times of turmoil, cash becomes a safe haven. Many people view the US dollar as a protective asset. Rogers understands the risks, but believes in the power of perception. Investors must consider their options. If cash is not generating returns, what is the next step? Rogers encourages exploring alternative investments. He suggests looking beyond traditional stocks. The world offers many opportunities for those willing to seek them out. Investing in a crisis, the role of US dollars. In times of crisis, the US dollar often becomes a refuge. Many investors flock to it. They see it as a safe haven. This perception is crucial. It drives demand, even when the fundamentals are shaky. Rogers acknowledges the irony in this. The US is the largest debtor nation in history. Yet, people still trust the dollar. They believe it will hold value when chaos strikes. This trust can lead to increased demand, which boosts the dollar's value. Holding US dollars might seem contradictory, but in a turbulent world, it can offer peace of mind. Investors need to understand this dynamic. When markets falter, the dollar often rises. This is a pattern that continues to play out. The risks of a market at all-time highs. Investing in a market at all-time highs carries significant risks. The potential for a downturn looms large. Many investors feel invincible. They believe the upward trend will last indefinitely. But history tells a different story. When markets peak, they often fall. The question is not if, but when. Rogers urges caution. He highlights the dangers of complacency. Investors must remain vigilant, even in seemingly prosperous times. Markets do not operate in a vacuum. External factors can trigger sudden changes. Economic indicators can shift rapidly. The landscape is unpredictable. Investors must be prepared for volatility. Precious metals, a safer bet. Precious metals often attract investors during uncertain times. Gold and silver have long been regarded as safe havens. They tend to hold value when other assets falter. Rogers supports this view, particularly for silver. Silver's price is currently lower than its all-time high. This presents an opportunity. Rogers suggests that investing in silver could be wise. He believes it may offer better returns than gold at this moment. Investors should consider diversifying into precious metals. They serve as a hedge against inflation and currency devaluation. In a world filled with uncertainty, these assets can provide stability. Diversifying investments, beyond stocks. Diversification is key to a robust investment strategy. Relying solely on stocks can be risky. The market can change quickly. Investors should explore other options. Commodities, bonds, and currencies offer alternatives. Rogers emphasizes the importance of exploring these avenues. There are various ways to make money. Learning about different investments can provide a safety net. The world is full of opportunities waiting to be tapped. Investors should not limit themselves. Understanding global markets can open doors. Knowledge is power in the investment world. It allows for informed decision-making. Financial stability risks in today's world. Financial stability risks are prevalent today. Many markets are booming, which can be misleading. When everyone feels secure, it's time to question that confidence. Rogers warns against complacency. He points to the risks in emerging markets like Uzbekistan. While exciting, they come with their own challenges. Investors must do their homework. Understanding local dynamics is essential. The landscape is complex. Investors need to stay informed. They must be aware of the potential pitfalls. Only then can they make sound investment choices. For those seeking to take control of their financial future, platforms like Interactive Brokers can provide access to a wide range of investment opportunities, allowing individuals to participate in the market and potentially build wealth over time. Click the first link in the description to learn more. Want to learn more about investing? Like this video and subscribe to our YouTube channel for regular tips, tricks, and insights.